Today we're going to look at the NASDAQ 100 from a technical, fundamental, order flow and sentiment perspective. Now if you're new to the channel, a sub would be appreciated as I provide valuable educational content on a daily basis. And if you enjoy the video, please smash the like button for the YouTube algorithm. And as always, let me know down in the comments below exactly what it is that you would like me to cover in my next video. Now if you've not been living under a rock, I'm sure the first thing you saw today is that the US stock market is once again in a bloodbath. NASDAQ today is down 3.3%, S&P is down 2.8%, 2.08%, and the Dow Jones is down 1.15%, extending its losses that it had for the first start of 2022. Now, a lot of people was going and had asked me, hey, what's going on with the NASDAQ? Why is it falling so aggressively? And it's quite difficult to make that assumption if you're just going to look at the technical analysis, because technical analysis would have told you that the price excuse me, that the price was trading at a good place to buy. Unfortunately, sometimes you get fundamental data that comes out of nowhere, wipes up the liquidity of every retail trader in the market. Now, the reason why there was a big sell-off on the NASDAQ, it's very important to keep in mind we are currently in the earnings season here as well, and Snap came out, and Snap they says plummeted 30%. So we're going to start here with the fundamental data. It says here that Dow futures fall, Snap says plunged after add slowdown warning. It says here that the Dow Jones fell more than 200 points, poised back, give back a chunk of Monday's nearly 2% advance, which is quite funny because the market is just stuck within a consolidation. So we can see that the biggest reason why the stock market had fell to its face today was purely because of Snap came out, they says plummeted 30%, which extended in yesterday's trading after the CEO Evan Spiegel, he came out and said that uh, uh, um, he said that the company was not going to meet their earnings or their targets this week as well. It's believed that he hooked around Snap the office, handing out sad haiku to his employees that read, "We are in trouble, don't go on to the media, bears take selfies too." What he basically did was, he was telling people that bears, you guys know bears means sell, so sell, they also take selfies, like selfie stick, meaning that that the outlook was going to be quite bearish today. So well, moving on, it is needless to say that the media did not catch on what he was saying, but the Spiegel's internal company email let slip that the Snap will miss its yearly targets for EPS and revenues, while hiring plans will be slowed to tighten the purse strings. Snaps may miss both ends in Q1, but it wasn't a nightmare report card given its active user base increased by 18% year over year. And the rumors spread across the tech sectors there as well. Now we can see over here, excuse me, we can obviously see here, this is the sentiment data for the NASDAQ, but we're going to come back to that very soon. But the bad news for the company Snap had spread over Facebook. Facebook was down 7%, Pinterest was down 12%, and the company Snap itself is now down 70%, and that is not a good thing for the stock market as well. And if you think it stops there, Powell still needs to come out and introduce that new interest rate hikes. We have the Fed speaking tonight here as well, so you can definitely expect that to come through as well. Next up, if you look at the fear and greed index, you can see here that base of the stock market, we do have the index is it's clearly showing us that investors investors are quite scared, and as a result of that, what normally happens in the times of fear, they panic sell, and we can see exactly that's what's happening in the stock market there as well. If you look at the sentiment data, so what the retail traders are doing in the market, we can see a 77% of retail traders are on a buy, and it's only normal that the market would complete or continue that sell off there as well, because we know that the investors require that liquidity from retail traders in order to move the market. Next up, we do have the COT data, so the commitment of traders, and which tells us what the biggest banks and hedge funds are doing in the market. We can see here on the last report that hedge funds added only 566 longs. They also closed their 1,139 short positions. The overall net positions had slightly increased, but that's because the market had been stuck within this consolidation phase. Now I'm going to drop straight down on the daily time frame. Now there's a very easy way to approach the situation. Now if you look left, you would have probably noticed by now that the NASDAQ had been stuck within this consolidation. Then there's a good possibility for the market just to continue sideways up until we have a clear indication of what the Feds are going to talk about tonight. But I would say the best way to approach the situation is very simple. If you do get a clear break below this level, then on that retest, I would then start looking for selling opportunities. But it's also very easy to make use of this market just to within this consolidation phase. The bias will remain bearish on the NASDAQ until we hit this level here as well. So if you want to catch this sell on the NASDAQ, I would suggest just wait for a clear daily break and then you sell this thing all the way to the downside. Now that's all from my side. Thank you for your time, and as always, cheers for years.